China's economy is indeed experiencing a slowdown or distress. It could have various effects on the global economy and on neighboring countries like India. Here's how the situation could potentially impact India's power, trade, and exports. China is one of India's largest trading partners. A slowdown in China's economy could lead to reduced demand for Indian exports, affecting sectors that heavily depend on Chinese markets. Conversely, India might need to explore alternative markets for its products to offset any potential decline in exports to China. Investment and capital flows. If China's economy is facing distress, it could impact global investor sentiment. This might lead to investors being more cautious about investing in emerging markets, including India. Reduced foreign investment could affect India's economic growth and development. Commodity prices. China is a major consumer of commodities like metals, energy, and agricultural products. A slowdown in China's economy could lead to decreased demand for these commodities, which might lower global commodity prices. This could both benefit and harm India, depending on whether India is a net exporter or importer of specific commodities. Manufacturing and supply chains. Many industries in India rely on imported raw materials and components from China. A disruption in China's supply chains due to economic distress could impact Indian manufacturing and production processes. This might also prompt India to diversify supply sources to reduce dependency on a single market. Global economic impact. China's economy is intricately connected to the global economy. A significant downturn in China could lead to a broader global economic slowdown, which would have indirect effects on India's economic performance through reduced demand and market volatility. Policy responses. India might consider taking certain policy measures to counter any negative impacts from China's economic distress. This could involve enhancing domestic consumption, stimulating investment, boosting infrastructure projects, and focusing on technology and innovation to drive growth. Geopolitical dynamics. Economic changes in China could have broader geopolitical implications, potentially affecting regional dynamics. India might need to adapt its foreign policy and economic strategies accordingly. Tourism and services. If China's economy faces distress, Chinese outbound tourism could decrease, impacting India's tourism sector. Additionally, reductions in global trade and economic activity could also affect India's services sector. It's important to note that economic situations are complex and multifaceted. While a potential slowdown in China could have some negative impacts on India, it could also present opportunities for India to further diversify its economy, strengthen its domestic market, and forge new trade relationships.